Europe's biggest bank announced it's hiring former RBS financial director Ewen Stevenson to succeed Iain Mackay. HSBC shares are down on the news, as are RBS's. Bloomberg's UK banking reporter Stephen Morris joins us with more. I mean, is there much market reaction to this? We're in a down day in the markets anyway. But is it a good hire for HSBC?
I think it is a good hire. I mean, Mr. Stevenson came across after 4 years at RBS. Now, those were 4 years of losses, paying fines, getting involved in scandals for, basically not behaving as they should towards their customers. But he came out of this with a good reputation. As a CFO, the bank has started to return to public ownership because the government still owned about a 70% stake until a couple of weeks ago. And the person he's replacing at HSBC also had a good reputation, but he'd been there for 11 years. And he was being considered for the CEO job, which went to one of his colleagues, John Flint, and not him. So perhaps that could have contributed to his decision to move on, find something else to do after 11 years. But in general, this isn't going to change the direction of bank. HSBC is going to keep doing the same things that it's done before. But overall, the people I've spoken to think that it's a good move.
It speaks to a level of uncomfortableness, though, right, Stephen? Investors are sort of itchy. They want their European banks to sort of get it together. What happens next when it comes to HSBC, which obviously isn't wholly a European bank, but obviously, has a lot of presence in Europe?
Well, that's right. They just released a new strategy under the new CEO last week, where they announced they're going to invest $17 billion in technology and growth in Asia. So what we're going to see out of HSBC to solve its problems in Europe is by putting even more money, investment and time in their bases out there in Singapore and especially Hong Kong. So that's where the positive sentiment for HSBC is coming now. Now, one of the big problems that the new CFO will have to contribute to is how to govern a bank that large in 67 countries with over 200,000 employees. This is a very different beast to RBS, and they'll have to step up to the challenge.
Was the chairman not happy with Iain Mackay? I mean, now that he's, quote-unquote retiring, might he pop up somewhere else?
That's true. They always say people retire and then they get other jobs in about 6 months or a year's time when their gardening leave ends. So we'll probably see him pop up at another financial institution. The CEO, John Flint, would have been in charge of picking his executive team, but it looks like the chairman, Mark Tucker, who used to run AIA Insurance out in Asia, also played an instrumental role in his hire. Now, when a new executive comes in, they usually like to bring in their own people as well, and it can often be a little bit awkward to work with some of your colleagues who have been passed over for the top job. So that may, be a little bit of the sentiment behind that. And
Stephen, let's talk about where he's left, RBS. What there in terms of the gaps that need filling?
Well, they'll have to find a new CFO in short order. That'll be a semi-government appointment, considering they still own the vast majority of the lender. But RBS is on the mend. It's paid the majority of its misconduct fines from the past. And the controversy now is how much money the state can actually get back. It bailed them out to the tune of around £45 billion. And looking at the share price now, we're not going to get that back as taxpayers. So really, the new CFO has to come in and really work out a way to sell this down to hedge funds, institutional investors, and even perhaps retail investors as well, and try and recoup some of the losses that the UK has taken on bailing out this bank.